Unity's out. It's not really doing anything. A lot of volatility. Trade down to 23, up to 26. Let's see if that thing can wake up at all. That Rev guy didn't look good. I gotta do disclosure before I talk about it though. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure, I'm out of BABA. Actually, just like a moment ago as I was starting this, got out of Google. Got filled on the offer after hours that liquidated the position. So this position, it does not exist. I am not in Google. I am not in Google. I am not in Google. And then my new positions are in DJT. The only thing I want to say, well, I'll talk about the trade. The only other thing I want to say about this DJT is, a lot of us traded it today. I thought that as a team we did a really good job, and in general as a team we do a really good job not talking about politics, and I want to keep it that way. I very much always want our group to be focused on trading and markets, and politics have nothing to do with that, honestly, or very little to do with that. And if anything, all the statistics that I've ever seen have shown that anyone that incorporates politics into their trading or investing theses or whatever, it just causes them to, primarily not make money. I will say nothing for or against anyone that's running for president or anything like that. And my position in this DJT has nothing to do with any thoughts of his politics, positive or negative. It was purely a technical trade, which I'm happy to talk about. But first, let's jump into the market itself. Really strong day today, which this is what I was kind of looking for. I thought there was maybe a little bit of extension there with the market. Maybe we need another day to rest, but the way that we held yesterday and the way that we held 515 and bought up that gap up, and the market had the opportunity to bring us down lower than that, showed you how strong the bulls are in this market environment. So even though we were still a little bit stretched from the 80 MA on the daily, I think I set a pretty bullish tone in the morning meeting today, looking for continuation, and it's what we got. It was a pretty strong intraday uptrend day today. The SPYs finished up 0.6%, the Qs finished up 0.3%, and the IWM led it, being up over a percentage point, with the TLT going red to green today. So nice little move there, red to green from the TLT. From an intraday perspective, we ended up not having too much of a gap. Just going back to the pre-market super quick, we initially were set to gap down this morning, and then we had the unemployment number come out that managed to rip the market up. And that set the tone basically for the rest of the day. So really strong, good continuation. The 80 MA on the daily chart never caught up to 515, but it didn't matter. We were able to continue, and now as of today's close, we're kind of back in that no man's land zone. Looks like we're about $7 extended. The 80 MA on the daily will be a little bit higher tomorrow, so that'll play some catch up. But we're kind of entering back into that no man's land. The market did break out today, though, of this little kind of bull flag. So it's also very possible that we do see some degree of continuation tomorrow. So it's the SPYs. Qs were relatively weak all day. They were relatively weak off the open. They did not give that same degree of continuation, and they're still below 442, which is a key level. But that 80 MA is catching up, and this chart pattern also still looks pretty bullish. And the IWM, basically created a pivot low yesterday and worked its way back up. So the Russell also looks great. It held 203, which is a future support level that I want to pay attention to. And that's pretty much it. Market looks fantastic. Good relative strength in the Russell. TLT moved higher today. Our flow seems to be conducive to a bullish continuation here. And I'm kind of curious to see if this market, now that we got that little 5% correction in the SPYs, can melt up beyond new all-time highs. It seems like we are on the way, and the market looks pretty good overall. So that is the market. As far as a trading perspective today, as I said in yesterday's afternoon meeting, I really wanted to take like a little bit of a half step back and be a little bit tighter on my trading, a little bit smaller in some ways on my trading, and for the most part, I did that. I did a really good job today. I really followed my game plans. Almost maybe to my detriment. I got stopped out. I tried to cheat initially on this DJT, which, first of all, I think it came on our radar yesterday morning a little bit as well, but Brant brought it to our radar really for this break of 50 today to really look for continuation. And it was a great call, though tricky off the open. I tried to cheat on this thing off the open. I thought they might try to break it right off the open. It really does seem like, and this used to be one of my favorite all-time trades, was that off the open momentum breakout trade, and it kind of just doesn't really exist in the same way as it used to anymore. And today was kind of no exception. I tried to get a jump start on that DJT. We had some concerns that if it broke 50, there'd be no liquidity. It'd be very difficult to get some stock. So I cheated on an entry a little bit, didn't wait for the 50 to break. I averaged down a little bit on the position. And honestly, if I was consistent in how I traded yesterday, which is not what I want to be. I want to be consistent, honestly, in how I traded today. If I was consistent in how I traded yesterday, I wouldn't have stopped myself out, and I probably would have made a lot more on the name overall than I actually made. But I wanted to keep things tighter today. I wanted to, just tighten everything up a bit. So I ended up stopping myself out of this DJT opening kind of position at 48.50, which is unfortunate. Quick dip low to 48.30, and then it started waking up and going. And then when this thing started to go, I had an alert at 94.50. I started to buy some options there. Brent was already in some options, and then I didn't. At one point I bought that feeler, and I also had a buy stop at 50 for the break. And the volume to me initially, and it's hard to see because the volume really wakes up on this bar, but the volume below 50, even on this bar, was not compelling. So I actually canceled the buy stop that I had at 50. I didn't take that buy. It was only after it actually broke 50 that the volume really accelerated, and I was like, all right, if this is going to be right, it should never breach the ignition bar low, which is 49.43. So I traded in a way that I don't typically trade, and I scooped some stock up actually at 50.50, giving it pretty much $1 down. And honestly, the sizing that I took there was about a quarter of the initial sizing that I had. Enough that it paid me well on a $4.50 up move, and even with the opening loss in the equity and having only a quarter of my size for the actual move and having it from $1 higher than where I actually had stock, over $1 higher, I was still able to finish, positive in the underlying equity, and very positive in the in the calls. The ones I bought that expire tomorrow were up like 500% or something like that, and the ones that expire next week were up pretty decently as well, over 100%. Though Brant seemed to be a little disappointed just with the amount, which is what it is, I guess. Very, very volatile stock. I still think that the company itself isn't even a company. It basically doesn't even exist. There's scandals all over the place. It's probably just about worthless, but that's what everyone else thinks also. And everyone is trying to be short this thing. I've mentioned that buddy of mine in the past who buys every crypto top. Well, occasionally he also dabbles in options. So he's telling me about his, $20 puts that he has on DJT that expire in like 2 weeks or whatever, and I'm like, all right, probably another signal to actually buy this stock. So great call, and it's a good example of like putting a fundamental opinion to the side, because we are definitely in an environment where even if companies are kind of garbage, we know that they have the capacity to really squeeze up. So that kind of turned into a really good trade today. But overall, I had pretty good P&L, but it really just came from my thought process in the market. I've got 0 shorts on right now. I've got 25 to 30 longs on at any point in time during the day today. I really think that a lot of the stuff that I was concerned about back in March, just with kind of where positioning and sentiment was starting to get to, really was able to wash out in April. And that actually, I think, has the capacity to bring this market through to new all time highs. And then the confirmation that we've been looking for was when the SPYs got back above 515. We mentioned at that point that they were extended. So, we don't like to chase extension. There's a higher probability of failure when you have extension. But now, after the way the market held yesterday and the ADMA caught up a bit and we're not as extended on the daily chart, then I feel like, I like the idea of, really pushing the long side of the market again. So that's kind of where I'm at. I've gotten pretty decently heavy on the long side, and I kind of continue to be, though today was a little bit more of liquidating swings, long swings, than it was adding to them overall. And if we do, hit $10 of extension in this market, which by the way, that was the absolute bottom of the pullback, was the only day that we hit $10 plus extension in the market away from the ADMA. But if we do get to, if we're able to continue to basically highs tomorrow, like 524-ish, I'll probably look at that point, just with the degree of extension, to further piece out of longs and potentially begin to build a little bit into shorts. So, yeah, I think that kind of covers things. Did lose money in that SVCO a little bit today. Had a couple failed trades, had one good trade, this recent IPO. There's no daily chart. I'm trying to look at a daily chart. I thought this was an interesting one. Priced at $19. They opened it up a little bit high, but it didn't seem outrageous at 21. 6 million share float. They don't exactly have a lot of revenue coming in yet, but I like the fact that Micron's an investor and owns a percentage in it. So I thought that maybe there could be a trade here, just because that whole semi space has been so hot. So I tried to trade off the open, failed, got stopped out. I tried it versus $20 because $20 had, I can't call it a stabilizing bid because it was a NASDAQ IPO, but there was a really big bid on NASDAQ at $20. So tried to lean against that. Got stopped out twice actually on that. Got stopped out on the first trade where I tried to lean off 20. And then when it snapped back through 20 and a refreshing buyer came in, I rebought the stock. I was able to sell a little bit of stock and just move up to 2032, but then I got stopped out again. So basically I actually took 3 losses. And then got out of the way. And then when it tested $19, which was the IPO price, there was liquidity down there as well. So I tried it versus 19, and that held in. The low of the day was $19.02. So was able to make back some of the loss that I had from 3 or 4 failed trades, but not enough to get me to green in the name. So finished red in it, but the last trade paid, so made a few bucks back, which making money back is never the right way to think. I don't want you to think that I'm even thinking that way. To me, it just looked like a trade that was worth taking, and it made me what it made me, and net, I'm down in the name. Just about covers it. Got out of my Alibaba again today into the up move into 80 because it's kind of just been my target. And again, I'll look to rebuy a dip. It's not nearly as extended into 80 as it was this time, but my game plan for Alibaba has broadly been a game plan that has been more aggressive, but for a smaller target, whereas my JD plan has been less aggressive, but for a much bigger target. I'm looking for a move into the low 40s on this JD. So I got out of Baba again. I got into and out of Snap again on the dip. Paid me a couple bucks. I got back out of Google just after the close, above 170 that I got back into. I think small yesterday. I added some into the down move this morning and liquidated that. Google was a little relatively weak today compared to some of the other names just because of their buyout of HubSpot, I guess, that they're looking to do. And that pretty much covers everything I think on my end. I don't have anything else really to talk about. So I'll turn it over to you guys. Happy to answer any questions that any of you guys have. So actually, just give me one quick second to look at this thing. Yeah. Not doing anything. From Carol, Looks like you traded right off the open. Looks like trading right off the open is not in general good. Better to give the market to establish itself in the first 15 minutes. Looks like momentum off the open is quite rare. How do you recognize when to go right away versus being patient for a pullback or a pivot low? Sure. So I'm still a big, trader off the open. I always have been. It's probably extended itself now to like a little bit pre-market also. Um, as I was saying before, traditionally those like off the open momentum breakouts used to always be my best trades. I have definitely found that over the course of the last several years that those trades don't work as well as they used to. But I still do a lot of my trading in the beginning of the day. The statistics that I've seen from traders, and these statistics are a little bit stale now, so I'd be curious to see if they've changed. But traditionally, I found that the most experienced traders tend to make the most amount of money in the first like 30 minutes, and that traders who are newer but are also like good and newer tend to do best between 10 and 11 after they've had a little bit more time for the market to establish itself. So with where I'm at now, the opening momentum breakout again, like with that DJT today, just really seems like it doesn't often go in the same way as it used to. It still does sometimes, but not in the same way that it used to. So it's like sometimes it's like you kind of need that cheat, or you almost need that little pre-market cheat, or more to what you're saying, you need 15 minutes to let the market digest a little bit. But I think that applies more when there's a gap, a bigger gap than anything else. If you got a big gap, it makes even more sense, I think, to wait that 15 minutes, let the ADMA begin to catch up a little bit, see how the market has traded through that gap. Is it flagging? Is it pulling back? Is it momentum selling? Is it creating a pivot point that I could go long off of? Seeing what it looks like when equilibrium catches up. I think that makes a lot of sense when you have the gaps and then looking for continuation. But when the market's a little more flatter, today's open was a little bit more flatter. You don't have that luxury, and that's when I think that you can just buy things that are breaking more quickly. But with that said, I do generally like gaps because I find that they give us a little bit of an advantage. So I hope that helps with your first question. Your second question, what are your rules for shorting? I hurt myself trying to short a market that is strong. Thinking to even make a rule not to short unless very specific conditions. Sure. So rules for shorting. In a lot of ways, my rules for shorting are the exact same as my rules for being long. A trade is a trade. A trade is a trade where it has a reason and a stop loss, right? That's the definition of a trade. The definition of a trade is something that has a technical reason. Why are you getting in? Why do you think that you can make money? And has a technical out. Your out is the place where you are taking your loss if you're wrong. That's always been my definition of a trade. So trades can set up in the exact same fashion, both to the long side and to the short side. Um, a bull flag versus a bear flag, a breakout versus a breakdown. So in that regard, it's the same. Now, a little bit bigger picture, um, markets tend to go down faster than they go up, but most of the time they tend to go up. So that's kind of one thing that you want to be thinking about, I think, broadly when you're trading. When you get a really bad bear market, when you get a weak market, which is happening a lesser percentage of the time, those down moves can be very fast and furious, and you can make a lot of money in a short period of time by being short. But the majority of the time, the market is in more of a bull market than it is in a bear market. So the majority of the time, very broadly speaking, you're better off being long than short. So you want to understand the environment that you're in, and that goes to just being a layer of probability, right? What do we say? Some of the important layers of probability that we like to pay attention to include relative strength and relative weakness, and the market itself. Well, the market itself will tell you what it wants to be, right? Just popping back over to the spies. When this candle came in here back here on April 15th, that was a candle that very specifically told us not to be buying anymore. That was a candle that said, all right, now for this period of time until things change, broadly speaking, we're in an environment where you can be better. You're better off being short than long. And again, not always, but a lot of times, down moves in the market tend to happen much faster than up moves in the market. Look how fast this down move was. If you're on the right side of that down move, you could make a lot of money in a short period of time. But now, the market changed, right? It was in a bearish mode here relatively briefly. You could argue that it actually started back on April 4th when we had this first candle that we describe as like a day to take notice of, negative Maribozu. Couldn't make a new high, but then the real breakdown continuation happened here on April 15th. So in that period of time, you can be better off on the short side of the market than the long side of the market. And again, you can make money much more quickly. So very broadly, and we haven't done this game in a while. We're doing this a lot in 2022 and probably early 2023. I do like to play this technical analysis game with the daily chart of the SPY's Qs and the IWM, and I just call it the bullish, bearish, neutral game. And you just basically look at the technicals and you say, all right, is the environment bullish, bearish, or neutral? And I can do it with you, very simply right now. Uptrend, bullish market. Data take notice of, maybe made the market a little bit more neutral right here. Breakdown candle here, bearish market. Well, bullish market, I'm broadly better off being long than short. I want to be looking for longs primarily. Bearish market, I'm better off looking for shorts and longs. Neutral market, a little bit of both potentially. Relative strength and relative weakness becomes even more important. After this absolute low came in, we got a bounce, and then we got a higher low. And if you remember, we did a great job back here on April 24th, where we said, even if you're bullish, you should expect that the market's going to pull back a little bit. Where, I think we said 498 to 500. This low was 497.50, created a higher low. When the higher low came in, and especially once it was confirmed the next day by the higher high, this market then changed from bearish to neutral, maybe arguably neutral bullish. And then when we started to clean up above this pivot high, we got more bullish, and then full confirmation was above 515. So right now, and this was my message this morning, we are back in a bullish environment. So what does that mean? That means that you want to be looking long, not short. Now, it gets a little bit more nuanced than that, right? Because it's not just are we in a bullish and a bearish market. There are other things to consider. One of those things to consider is extension. So I might have a market that's clearly bullish, but if it's $13 extended away from the 80 MA, I can tell you that I'm not buying it, and I'm probably looking to short it, and I am especially looking to short it if I still have longs that are on. Because, yeah, we're in a bullish environment, but that bullish environment has extended itself in such a way where just the way that markets work, which tend to have some degree of mean reversion from extension, and that's why equilibrium is so important. I can have a bullish environment where for a shorter period of time, I would rather be short than long because of the degree of extension. Or the opposite was true here on April 19th. And that April 19th, again, if you remember, it was tricky because it was a Friday and there was geopolitical concerns, so it was tricky. But that was the day where the market exceeded $10 of extension in the SPYs and definitely the Qs. I think the Qs were like 13, 14, or 15 at that point, where it's like, all right, we're in a bearish environment, but my extension rules are telling me I should definitely not be adding shorts, and I probably should be looking for longs. And the other degree of nuance that I would add to that is just positioning and sentiment. Where are we with a positioning and sentiment perspective, which is how back in March here, even though the environment was still bullish, the positioning and sentiment were actually starting to signal some warning signs that were saying like, hey, yes, the uptrend is still intact and that should absolutely be respected. And again, this uptrend went further than I expected it would. I started to turn a little more thought process bearish in like mid-February initially, and we continued for a month and a half beyond that. but you pay attention to positioning and sentiment to also give you a signal. So, coming into today's trading session, and again, I really tried to give a more bullish morning meeting because we're back above 515. We fully negated this down move. The environment has gone from bearish to neutral to bullish. Yesterday, we retested 515, had the ability to pull back lower, didn't. Bulls came in and took a stand. And on top of that, the positioning and sentiment concerns that I had back in March are washed out because we had a 5% plus correction in the market, which, like I was just saying in the beginning of today's afternoon meeting, now means that reset actually means it's even more easy for the market to actually be able to continue up, right? What do we know? We know that CTAs, as an example for this week, are they're buyers, and they're buyers on decent size in any tape, up tape, down tape, flat tape. They're buyers on any side of the market. Now, does that mean that the market has to go higher? No, it does not. The market can go lower. The flows from other areas in the market can exceed those systematic CTA bull flow that actually has to come in, but it doesn't negate the fact that it's still going to be there. So, that just means that right now it's just an extra piece of probability on top of the technicals becoming more bullish that says that, hey, there's a higher probability that we are actually able to move up right now. So, yeah, I mean, that's just kind of the message I was trying to get across this morning. I don't think that we have any business right now shorting the market unless one of two things happens. Unless we get very extremely extended to the upside, which I was just saying, I think if it were to happen tomorrow, we would have to be at like 524, 525 to really hit that point, and then I'd become more interested on liquidating longs and shorting a little bit, or the market fails, right? And the market failing is always a possibility, but it's not a possibility that you want to put money on. Let that come to you. There is a chance. We closed great today. It looks to me like we're working our way to new all-time highs, but markets are probability, and there is no such thing as 100% probability in the market. And anything can change very quickly, from a geopolitical situation that could move the market to an economic number that comes out that moves the market, or a new statement from the president or the Fed president or Janet Yellen or anybody, could change it, or the market could just fail. That can happen also, even if it's the much lower probability situation, I think. But even though that is always a possibility, it's not a possibility that you want to bet on. It's a possibility that you want to let it come to you. Meaning, if all of a sudden, tomorrow, looking at this chart right now, and the ADMA right now is at 513.70. It's going to be even higher than that tomorrow. We'll probably be getting close to 515. We're finally at a spot here where the market should not be able to get back below 515. So if it does, well, that's a warning signal. That's something that we'll pay attention to. But let that come to you. Assume that that's not going to happen, and then if it does, adjust. So I think that's how you want to be thinking about it, is to go back directly to answer your question. What are your rules for shorting? Broadly, it's the exact same thing as my rules for going long, but from a game planning and strategy perspective, I want to be more focused on the long side of the market or the short side of the market based on the layers of probability, and those layers of probability are the technicals, they are the trend, they are relative strength, the market itself, obviously, for any individual stock, chart patterns, and right now all that is pointing higher, and I see no real reason to fight it. It's one thing if you want to short an individual stock that has news or is relatively weak or whatever. I think we even had Tesla on our short list today to look at that. Tesla was super relatively weak, but it had bad news and it's relatively weak. And I still even said in the morning meeting, I was like, I'm putting this Tesla short on my list because of the bad news and the relative weakness, but I don't think I really want to be involved in it because I'm so bullish on the market right now. The market's telling me continuation. Do I really want to be fighting a weak stock to the short side in a strong market? Not really. I'd rather be going after this If I had more concerns about the market itself, then maybe then I'm like, all right, I want to short on the books because I'm concerned about the market. I'm concerned about positioning. So let me go after this relatively weak stock that's got bad news to put that actual short on. Um, and I see that some other questions have come in from other people, but I want to answer your follow up first, Kirill. So you're asking me about the VIX, which I'm glad it's a good question that you're asking because there's been a lot of chatter about it. So VIX is back to December 23 lows. You know, we're all the way down here at $12.70. I don't like doing much technical analysis on the VIX because it's not a stock, but you could argue that it's a little bit extended to the downside and that it could use a pop. But the thing that you got to remember about, the VIX is that, sure, when there's big events, you get these big squeezes. But just because it settles down at a low number does not mean that it needs to rally higher. I've traded environments. I remember this 2017 environment where the VIX was stuck between. I remember being very low. I don't remember exactly what the numbers are, but just eyeballing it, $8.80 and roughly $14 for well over a calendar year. So if you get into an environment where the market is just an upside grind and there's no real bad geopolitical or economic situations, no catalysts basically, it's not a contra indicator that says, all right, the VIX is really low, therefore we should be shorting the market. The VIX, if it wants, it could stay down here. It could stay around 13, 14, 12. It could stay down here for the entire rest of 2024 if it wants to. It's not something that I would use as like a contrary indicator where, hey, this is low, it has to bounce, or hey, the VIX is low, so the market has to pull back. I would use it more in the moment. If you're seeing the VIX start to catch a bid, well, then maybe that becomes a warning signal. Or if there's a VIX divergence from the market, then maybe that becomes a warning signal. So how long can it be in this environment? Again, just go back to 2017. We could be here till 2026 if we want. I'm not saying that's going to happen, but what I am saying is it's not a reason to short the market, in my opinion. Appreciate those questions. From Cameron, I traded Airbnb today. Okay, yeah, Airbnb on the earnings report guidance I don't think was great. I didn't look at it super closely. I was looking for continuation lower. I got short once Airbnb bounced back to 148. All right, even though it's a big gap down, I do always want to start with the daily chart, always. And I want to see what are the daily levels. Are there any nearby daily levels, or is this thing sometimes, especially in earnings reports, you can just have stocks gap to kind of like no man's land. Big gap up, it's never traded there before, there's no levels to pay attention to, or sometimes with a big gap down, it's like, yeah, there's some levels, but you got to go so far back that none of them seem particularly significant. So when I'm looking at the Airbnb daily chart in these upper 140s, I'm seeing a lot of price congestion here, but I'm not seeing like a lot of really clean levels. There's some support maybe around 145. And then some further support in this like 140, 250 area. That's kind of the only thing I'm seeing. 150 is a nice fat round number. Sometimes that matters a little bit. Maybe it looks like it was a little bit of an inflection point back here in January and February, but it was never like clear support or resistance. And then maybe there's some resistance up at like 150, where it broke down from, basically like 155 or so. And that was actually previous resistance, previous support. So 155 looks important, 145 looks important, 150 maybe a little bit. So that when I'm doing my own game plans in the morning and I'm writing down these levels that I write down, that I share, that's kind of what I'm doing. And if I see a stock that's having a big gap, but I'm not seeing any like, really close levels that are giving me conviction, I usually don't add it to my list. Unless I think that I saw something compelling in the report. Like I mentioned this morning, and ARM bounced back really nicely off of it, that there was some, I don't remember what it was, but I read some language from the CEO of ARM that came out that I thought looked like really positive. And I said in the morning meeting today, I'm probably not going to trade this arm, and honestly, for the same reasons. I don't feel super comfortable with the stock. I'm also trying to keep it tight today. But 95, I guess, is a little bit of a level. 110 is a little bit of a level. If it's in between that, I'm not excited about it. But I thought that maybe they could buy it back up. So it's a little bit more of a special circumstance. Airbnb, I just didn't have anything to hang my hat on. I didn't have any levels I felt compelled about. I didn't see anything particularly exciting in the report that felt compellingly bullish or bearish to me. I did mention in the morning meeting that very big picture, I am bullish on the company. I like Airbnb, and very big picture, I think that dips are buyable. But, that's not necessarily a dip to 146. That's not any price. Maybe it means a dip to 130 is interesting, or a dip to 110 is interesting, something like that. I don't know. So that'd be kind of the first thing that I would tell you, just as far as process goes, because I always want to start with the big picture and then go down to the small picture. So popping over to the small picture, next thing that I'm usually kind of looking for on these names is that equilibrium catch-up trade, and it actually did it pretty nicely here. And I haven't read the rest of your question yet, but I will, obviously. I wouldn't hate the idea of shorting versus the 10 a.m. candle pivot high, this tail high. EDMA didn't quite get up to it. Trade would have failed. This is basically a very similar trade. 10-10, it pokes through. The EDMA is now fully actually caught up. It pokes through, it tails right back down. After that, I like that as a short versus this high also. So it's just, weak stock, gapped, trading in the direction of the gap after equilibrium caught up. And a lot of times that, I know Tate was going after that trade today. He tried it in a couple of names, but the one that worked well was Bumble. And he called it out, and I said I liked it. Heavy price correction, a little more price correction than I would like of the gap. But into the ADMA, creates a pivot off the ADMA. First test of that ADMA on an earnings day with a big gap. When you create a pivot, I like that trade. It's usually a pretty good trade that happened to be the low in Bumble today. So going back over to Airbnb, that's all I see that I like. So now let me actually read the rest of your question. I was looking for continuation lower. I got short once Airbnb got back below 148 and the VWAP at 935. All right. I can't give you any feedback on VWAP because I don't use it for my trading. I pay attention to it when other traders provide the information. I know Dennis, if he's here, he likes to provide the information on it, and a few other traders are certainly paying attention to it. I think Pat looks at a VWAP a little bit also. So I'm not against it. I just don't use it. And because I don't use it, I don't have any feedback for you on an opinion of a VWAP that's 5 to 10 minutes into the open. I've never used it. Thinking about it, I would want to think that it'd be very sloppy. If you're using just like an intraday VWAP on an earnings report in the first 10 minutes of the day, I would think that it almost hasn't had enough time to gather enough information to actually be useful. That's just my thought process, but again, I've literally never traded a chart that had a VWAP on it. So take it with a grain of salt. What I would say, though, is that you're shorting it so early in the morning that the type of trade that I would classify this as is what I call like a pure momentum trade. This is a pure momentum trade because the ADMA hasn't caught up on the 5-minute. So if you're trading something where the ADMA hasn't caught up yet, that you're trading for momentum, and that can be fine. And you especially want to try to trade for momentum when there's news or earnings. So I'm not hating on that. I'm just saying that's something that you need to recognize with your trade. So when you're trading for momentum, that means that you want to be right very fast. You want to be in the money very fast. And if you're not in the money relatively quickly, you want to also stop yourself out, I think, very fast. Giving it loose space is very hard on a momentum trade where the ADMA hasn't caught up yet, because where do you give it to? I got no reference point for you. I think the only appropriate reference point, I don't even like it, is just the high of the open, which is all the way at $150. Now you're risking $2 in momentum trade. The ADMA didn't even catch up to 150 until 955. Could easily push through 150 and work. So, if you're taking that sort of trade, that momentum trade that early, I think that you should be keeping it like real tight. You need to look to be in the money pretty much right away, and if you're not, you need to liquidate because it's a momentum trade. So you find yourself fighting the thing most of the day and getting chopped up all over, getting chopped up overall. Looking back, Airbnb was not trading well, and I should have left it alone. Do you have any advice on identifying when a stock is just not trading right and being able to know when to move on? So, for when a stock or a market's not trading right and knowing when to move on, I guess would be after I see like a good trade fail that proves that my idea was wrong. So, um, I don't love your approach on the trade, and I'm saying that in a very specific manner because there's many ways to make money in the market, and if your trade off the open, the way you traded it off the open, is a way that consistently pays you, then you should continue to do it. But it's not ever been an approach that has worked for me or that I've ever utilized. So I don't like the initial approach on the trade would be the first thing that I would say. So for me, when do I know that the trade is dead and when to not be involved in it? It's kind of if the idea is if the trade itself fails. So again, this first trade fails. I'm trying to figure out the right words because just because a trade fails one time doesn't mean necessarily that you can't go back to it if a new trade setup actually occurs. So how do you know when it's just not trading right? So I would argue that if you missed this trade and you missed this trade, the first one failed, the second one worked. For me, for my approach, there really is no other trade in here the rest of the day. So it just becomes out of play because there's no setup. Maybe somebody could make an argument to me that if I was really focused on this lower high at 1035, could be something that could be tradable also. So I'll throw that in there too. This trade, maybe this trade. There's no other setups in here. It's just a dead stock. So then it's out of play and not trading right, but it's out of play and not trading right because there's no trade setup that actually comes in. I think that's the right way to do it, or right way to say it. Also, once you're able to establish a little bit more that it's just become a range bound stock, and I don't think that you can establish that until almost midday in this thing. Once it's just you're establishing it as just a range bound stock, well then it's out of play. Maybe you can implement some range based trading strategies, but for any sort of continuation types of trading strategies, then at that point it's just kind of shot. So appreciate the question, Cameron. I hope my feedback helps. From Vikas, JP Morgan and Citi are now in a consolidation after earnings. Let's take a look at the banks. XLF looks great. Citi looks okay. I remember not liking this candle 2 days ago, but it's negated it, and it looks like it's breaking out above 63. JP Morgan looks good after yesterday. This thing also broke up through that 195. Out of curiosity, what's Bank of America look like? Yeah, Bank of America not so bad either. These banks look pretty good. They're now in a consolidation after earnings. I would argue that they just broke out of their post-earnings consolidation. The Citi looks like it just broke out of it today. JP Morgan broke out of it yesterday. Bank of America kind of a little sloppier, but maybe today. How would you approach these? Buy at the break of resistance. Basically, yeah. I'd look to buy the break of the range, which again, I think some of these did that today. So for Citi, like 63 would be the area that I'd be paying attention to as an example. Or if I don't get the break, once it's above 63, I think that you can then be looking for trades that are like continuation type trades. Higher low pivots on the daily chart, things like that, to see what you want now is you want the breakout that happened in Citi today, and I know it's only by 40 cents. It could still fail tomorrow. But you want the breakout that happened in Citi today to actually be the catalyst that leads to a new uptrend for the stock. And if that's going to occur, as long as this thing is holding above 63, I think that you can continue to look for long setups. Yeah, you're mentioning City is 10 to 20 cents away from highs. So this is where it's a little bit tricky sometimes with direct support and resistance, because it's like oftentimes support and resistance are not like a specific penny. Oftentimes they're kind of more ranges, because you'll have some tails that have gone up. Like resistance isn't $63. Resistance is the range between 62.80 and I'm just kind of making these numbers up a little bit, 63.35. So most of the time support and resistances are ranges, which makes it a little bit tricky. I try to narrow those ranges down as much as I can to a more specific price point. So for this, as an example, I probably would use more like 63. But then you want to have extra confirmation on your smaller time frames to confirm that the bigger time frame is actually breaking. So like what I want to see is that one thing is that it's never closed above 63. So closing price matters, as opposed to, it tailed above 63, but if I can get a close above 63, it's giving me a little bit more confirmation. And then in the moment today, you don't know when it's breaking 63 if it's just going to be another tail up to 63 quarter and right back down, or if this is the real movement. You don't necessarily know that, but you can look for smaller time frame pieces of information that can give you a higher probability that this is the real move. And that's basically going to be, volume confirmation, large order option flow confirmation, things like that. So yeah, great question. And then you have an additional question. How long do I spend in the morning writing down all these levels? I try to. My overall research process is basically from the time I wake up and log in through 9 a.m. and that typically starts between 6 and 6:30. So I'm probably spending 2.5, 3 hours every morning doing this, but it's not just levels. It also includes reading Pat's morning note. You know, yeah. I guess the majority of it is actually a lot of what I'm doing is I am scrolling through the VTF and reading everything that anyone here on the team has posted as far as news. It's particularly busy time during earnings season because I try to type up, even if I don't read every single piece of information on every single earnings report. I actually do try to type up as much as I can every single stock that I saw reported. And then like on mornings like this morning where there's so many of them, a lot of times I don't even necessarily read beat miss. I just like type up the stock. I say, hey, do the technicals look interesting on the stock? If yes, all right, now let me actually look a little bit deeper on the beating and missing aspect of things to see if I can get a little bit more conviction versus the levels that I'm seeing on the chart. So I guess I spent a decent amount of time doing it. A little bit of that time I would say also is getting diverted just to email that I have to just be doing at the same time. So maybe it's not the full 2.5 to 3 hours is 100% research, but I would say certainly a majority of it is. And there's a little bit of also, going back and forth and grabbing breakfast and things like that while I'm doing that research. Oh, and another portion of that 2.5, 3 hours is me getting all my orders in. I probably put in between 200 and 400 limit orders pre-market every morning into the market. That probably takes me about a half hour of that 2.5, 3 hours. I'm just trying to, think about it out loud to actually give you an answer to the question. There's probably at least an hour that is directly devoted to levels. So I go through every single name that was mentioned in the VTF, and then I and then I have like my list of go-to stocks, right? So it's like, yeah, if Apple wasn't mentioned at any point in the VTF, you better believe I'm still typing in Apple to see if there's anything interesting looking as far as a technical setup goes. Yeah, only 200 to 400. It does take a little bit of time. I'm very fast at putting orders into. If anyone's ever seen me back in the day in the office on how fast I get limit orders in, it's pretty quick. Cool. Appreciate the questions. Popping over to the YouTube. Yep, GameStop squeeze into the close. A few of us are still involved in it. Let's go. Love to see it. From Gabriel, why did I choose to close Baba? I see earnings mid next week, so it still has a couple more trading days. $80 has consistently been my target in Baba. And keep in mind, this is a trade that I've been trading and managing. When did I first get in this? Did I get in December? No, I think I got in January. Somewhere in January. I think it was after this gap that I first got in it. I've managed it this entire time, always with an $80 target. So when I got to $80 on the 2nd, I got out with a game plan to reinitiate the position on a dip to the 80MA. I got that dip to the 80MA yesterday, reinitiated the position, never got too heavy because it never dipped very hard, and then fully liquidated the position into 80 again. And now I'm back to the same game plan. I will rebuy if it touches the 80MA. What'll be interesting is when and if the stock starts holding above 80 and the 80MA starts getting above 80 and the stock hopefully starts trending higher, then I will be adjusting my game plan to continue to reinitiate positions in it every time it gets to that. So right now the game plan is basically buy. So I've been buying and selling this thing in 50-cent increments. So roughly, if it's at $78 and my game plan is 80, that would mean that I'd be buying. I'm not going to say it in shares. I'll say it in units. Like I would be buying enough where I could sell a unit of stock. Maybe that's 100 shares. Maybe it's 1,000 shares at 78.50. Another unit at 79, another unit at 79.50, another unit at 80. So I basically would be buying 4 units worth of stock. I'd buy another unit at 77.50. I'd buy another unit at 77. I'd buy another unit at 76.50 if it went down, and I'll continue to liquidate the position basically into 80 and redo that game plan. And I will continue to do that game plan forever or until this 80MA starts getting above 80, and then I'll readjust my game plan to start buying above 80, but I'll only probably buy like 1 to 2 increments at a time. Meaning if the 80MA is at 80, I'll buy, 2 sets worth maybe, where I have, I'm buying at 80, 80MA's at 80, and I'm selling it at 80, 50, and 81, and I'll be all out. And then if it continues to trend higher, then I'll continue to trail my starting buying price higher. And then on the downside, if it ever fails, I'm willing to risk everything that I've ever made in it so far. And I think yesterday after the close, I did the math on this name actually specifically really quickly, and roughly based on that strategy, starting at $78 or with a game plan up to 80, I can buy an increment every 50 cents down to like 64, I think, before I'm break even P&L wise on it. So that's a lot more of what I've been trying to do more and more recently, and that goes back to if Rich is here. He just commented on a little bit of what we've kind of been doing with this GameStop a little bit, where this GameStop, ever since we've been in it, we've kind of been doing it in these 50-cent increments, and today in GameStop, it's just kind of playing with the house's money, where it's like, all right, I need to buy $16. You can see I bought it here pre-market. I don't care when it's trading at $16. I'll take it. And I'm selling it at $16.50, and I rebought it at $16, and I sold it at $16.50, and I rebought it at $16, and I rebought it at $15.50, and I sold that $15.50 at $16, and I sold what I bought at $16 at $16.50, and I sold the other stock at $17, and then at $17.50, and then at $18, and then at $18.50, which you can't even see because it's in the stratosphere up here, and just kind of continuing to work that. That initially started off of a trade that is here on May 6th, where my stop loss on my trade is supposed to be this 1361. But so one thing, Rich, that you have the option of doing, if you wanted to, is, we're fully playing with the house's money. And my game plan with this strategy lasts up to $20. So at $20, I'll be 100% out of stock, and I will liquidate the position. Again, kind of thinking in terms of units. The flip side of that is, so every time, let's just say it's 100 shares to keep the math simple right now. Every time I do this, and it's 100 shares, it's $50 in my pocket, right? So let's say that I had positioned myself at a certain point, where after I got my initial kicks and my risk covered, that means that if I get stopped out at $13.61, the low from May 6th, it's a break-even trade. Well, now, every single time we get this move here, and it's 100 shares, we're saying, and it's $50. That means that if I continue to allow myself to get stopped out at 13.61, I will be break even plus P&L of every single time I've gotten a 50-cent kick, right? So again, just using today's example, let's to keep it simple, like yesterday didn't exist, nothing like that. Like just today exists. 13.61, I get stopped out, I'd be break even. Today, 1, 2, 3, 4, 5, 6, 7, and then 18.58. Eight sales at 50 cents each on 100 shares is $400. So if I choose to get myself stopped out now at 13.61 still, it means that I would make $400 in the trade. And again, it's actually going to be more than that because we did this yesterday, we did this day before yesterday, but just off of today, if I get stopped out at 13.61, it means that I'll make $400 in the trade. Now, one of the things that I've been playing with a little bit, and it depends a little bit on the trade. Depends, honestly. Like, I don't really believe in GameStop, so I might not do this with GameStop. Alibaba, I actually really believe in the company. I have the China thesis that we've discussed in the past. So that one I am willing to be a little bit more greedy with. But if you wanted to, you could take that $400. Let's say that you're, if it were to get all the way back down to $13, and I'm just trying to use simple math. Let's say if it got all the way down to $13.61, that you would have 1,000 shares. And that math is definitely wrong, but just go with it because it's simple. Meaning that, you're buying your shares back on your increments. So maybe I've got 100 shares left right now, and I'm buying 17, 16.50, 100 shares, 16, 15.50, 15, 14.50, 14, and whatever. We're up to 1,000 shares. So what I could do if I wanted to be super greedy on it, is I could take that extra $400 that I made today, and if back at 13.61 I would have 1,000 shares, I could basically drop my stop loss by 40 cents and maintain the game plan of, if the trade fails, I want to end up break even in it. So that means that now I could bring the stop loss down to 13.10 instead of 13.60, which lowers my probability of getting pushed out and enables me to work it further. So instead of now getting stopped out at 13.61, and this is where the math gets a little bit complicated and you might need a spreadsheet. I certainly use a spreadsheet. I could now, instead of getting stopped out at 13.61, I could actually be buying another 100 shares at 13.50 to take on an additional unit. But then I got to put that into my math, so that means that my break-even price on the $400 that I made today is not actually $13.11. It is $13.11, plus you would lose an extra $40 on the extra 100 shares that you bought. Whatever, I'm not going to do the math on it. It's a little bit higher actually than $13.11. But the idea is, let's say hypothetically now that it wasn't just today, that it was the last 3 days that you've been doing this, and that the stock gives a false breakout after hours today and comes right back down and stays in this range for 2 weeks. I don't know. And every day we're on average getting 8 50-cent movements out of it, and a number would probably die down because it's definitely trading larger than the average true range. But just say, hypothetically, just to get the concept across, every single day that you're doing that, if you're able to make an extra $400, you could continue to bring the stop loss down further and further and further. Keeping in mind that off that new game plan, you're also going to be continuing to buy new units at that lower price. So it's not a perfect one-to-one of I made $400 today, so therefore my 1,000 share starting position can go down by 40 cents. It's going to be a little bit less than that. But that's like something that I really like doing. So I'm trying to think if I got any more points on that. But I don't know. It can enable you to just kind of continue to cash flow on these positions for a while. It can become a little bit dangerous sometimes if you're chasing price higher by too much. So, going back to the Baba example, my target on this thing has always been 80. The question is going to be, if that 80 MA gets to above 80 and I've got no stock and I want to start at a higher price going forward, then I'm actually going to be raising where my, if my P&L 0 point is $64, but now I'm starting at a higher price, that also raises that number. So you got to be a little bit careful, kind of restarting. And at a certain point, if a stock goes up too much, whatever too much even means, then you might just want to say, I made my money in the stock, my trade worked, and I'm done with it, and I'm moving on to something else. But I've gotten in my head this concept, and I've gotten pretty close with it. Like, not pretty close because it's so hard to do. But there's a couple names that I'm getting there on. Like a Snap is an example that I've now been doing this in forever in Snap. This exact same kind of concept, except I've actually been doing it in 10-cent increments, not in 50-cent increments. But as long as the stock doesn't break out and go to 25 and start making me start this at higher prices, if it stays in this range broadly, I feel like I'm at the point, I haven't done the math recently, where I could hold Snap down like $3 and basically it's only at that price that I'm break even, and conceptually I would love to have that number be 0 or negative, which then it's like I can just do this strategy forever in this name, and every single time it moves, I'm gonna just put money in my pocket as long as the stock actually doesn't go up too much. Because again, if it goes up too much and you're starting at a higher price, then you're raising the overall dollar risk that you're doing with it. So that would be the only thing to remember, I guess. From Bill, did you always have the mentality of giving back all the profit you've made, or is that something you've developed the longer you've traded? It's something I've developed the longer that I've traded. Just curious if that was something you had to work psychologically toward or not. No, it's not really ever something that I've never struggled with, for me personally, giving back money that I've made. I have other struggles that I think many other traders have as well, of not wanting to hit out of a position where I'm actually losing money in, struggling with that aspect of it probably more. But as far as one thing that I've always been really good at is being willing to give back money that I've already made. And then when I've just gotten like deep into the weeds of playing with game plans and math and stuff on kind of these cash flow strategies that I'm talking about here, it's just made me, if anything, even more interested in giving it all the way back because of the potential of what it can do for me. I don't see myself ever not really having a position in Snap unless it just shoots up way too much, which it kind of just did here, and my target on this thing has been 1650, so I've been in and out of it the last few days. But this will be another one where if that 80 MA continues to catch up a little bit further, that I will, similar to Baba, raise my starting point on it, and maybe that will make it so that my break-even price on this thing isn't 3 anymore. Maybe it's 5, something like that. But it's so good that I'm willing to kind of continue to do it. But yeah, it's cool to think that we talk about getting your risk covered. Well, it's really cool to think about, well, my risk cover is it goes to 0 and it's covered. That'd be cool. which I still hope it doesn't happen because I just want to continue making money from it. So thanks for the questions. Oh man, Gabriel, you set that one off, huh? Apex Joy wants to know what I'm thinking about Burl. It's also my wife's birthday today, so I can't stick around for too long. Do I think Burl is bottoming or has more downside? It looks like it's trying to round up. Looks like it's trying to break up here. Maybe we can get a retest of 200. I don't really trade the name too much. Does my friend know that I fade everything that he tells me about? No. Nope. From Gabriel PAAS. No problem, Bill. Oh, this looks great. This is an example of a stock that went right away. Okay. Yeah, opening breakout went right away. Very nice. BPMC is going sideways after earnings. BPMC. Yep, flagging up here. Looks decent. Okay, cool. Looks like I got through everything. I got to jump. Have a great night, everybody. See you tomorrow.